I think you looked at how much the asset growth over time was in the 2 years, this 4.8%, and you kind of say that the overall monetary, like the M2 global money supply, is about the same growth rate.
Yeah, that's right. I sort of forgot those exact numbers, but yeah, 6% on average per year for the last decade, and I think actually a little higher if you look back, if you include the Great Financial Crisis in your sample size. But yeah, this is true inflation in my view. Over the last 10 years, it's been 6%. Not the like, I don't know, CAGR of 1 or 2% that you've been told is the case based on CPI. And I think that's one of those things where your lived experience, I think, can be more informative, more instructive than what you're told is actually happening to you.
It's super interesting when we, because a lot of whenever I talk about price, whenever we talk about like where future Bitcoin valuations might go in the future, I always get those comments of saying, oh, like, does this include inflation? Like, does this include like a possibility of hyperinflation? My general answer to that is always like, yeah, if we are hyperinflating, then like the currency that is hyperinflating doesn't really matter, like in price. Like, why would we then measure the Bitcoin in this hyperinflated currencies? Like, that's why, like, even in Austria, where we have the euro, we measure Bitcoin mostly in US dollars. Like, when we talk about that, the US dollar price is like here and the euro is not hyperinflating. So imagine how it is in Turkey, or like in Argentina, where this is kind of the thing. So I don't know. It probably doesn't matter.
And that was another, I didn't mention, but that was another reason why I wanted to make that global asset landscape chart and frame my, Bitcoin's full potential valuation based off of that starting point, because any fiat currency doesn't have any meaning as a measuring stick if you look long term, because you don't know what it's going to be worth 10 years, how much is a dollar worth 10, 20, 30, 40 years from now? You don't know, because you don't know how much inflation will happen, how much money printing will happen. But what actually matters is the purchasing power of Bitcoin relative to all other assets, as a proportion of all other assets. And that's where, you need to have a starting point of like, okay, what's the current proportion of Bitcoin to all other assets? And then you can decide whether or not that proportion will grow or not. Right. And so that's where having that chart enabled, my analysis to show that right now it's 0.2% of all asset value in the world is Bitcoin. And then if you assume it, if you make assumptions about how it will grow, then you can see what percentage of global asset value it is in the future. And in Saylor's analysis, where he gets to $13 million for coin in 20 years, that amounts to 7% of global asset value 20 years from now. So implied in that is that, he expects a 35x relative outperformance of Bitcoin versus, collectively all other assets over the next 20 years.
I think this is also this chart, I think, also what you also included, right? This is where like Saylor's prediction is in 2005, and then you can also see like where Bitcoin and gold and it's also interesting that in this one, gold relatively to the total goes down and arts are going up. That's interesting.
Yeah. So the one thing that, I guess to tee this up first, because I had my snapshot from 2023 where I did the first analysis, and then I did the same methodology to come up with fresh numbers for 2025, and then I was able to compare how have these numbers changed over the 2 years and get a CAGR for each bucket of how has it been growing over the last 2 years, and so that's actually that first column there is that analysis. But then the important thing is how has that grown relative to that 6%? Everything's grown on average at 6%. And so, has a particular asset bucket outpaced or underperformed, meaning has it on a relative basis grown or shrank? And that's where that highlighted that bonds and money have actually been shrinking on a relative basis, and gold and Bitcoin have been the big gainers on a relative basis. But having that little bit of analysis allowed me to compare that to Saylor's estimates. In Saylor's model, which uses my same categories and starting numbers, he has his assumptions about how each of those buckets will grow in value over the next 20 years. So he has a CAGR for 20-year CAGR, and those growth rates are the CAGR shown there, and then that final column is relative to his expectation of 7% annual growth of the whole pie. How do these individual buckets perform, and which are the relative gainers and losers? And so having explained that part of the analysis, which was really cool to see, but the result of it is interesting, that Saylor expects gold and bonds to be the big losers over the next 20 years on a relative basis. And I think that's possibly the one thing that Saylor's gotten wrong. We'll see, actually. It could end up still being right, but gold is doing really well the last 2 years. And I think, I think it's more likely that gold has a role to play in portfolios, in particular for traditional conservative portfolios among like central banks and large institutions that care an awful lot about the Lindy, the long-term reliability and going concern nature of the assets they're allocating to for their risk mitigation. And so I think gold will do well in this era of as this sort of fiat structure crumbles. I think gold and Bitcoin will do extremely well. Of course, I think Bitcoin will do way, way better. But I think that relative to to all other assets, I think gold probably has some growth ahead of it. Whereas Saylor assumes that it actually continues to shrink into obsolescence in the next 20 years. I don't think that happens in the next 20 years. I think that happens, over the next 100 years. But I think that's probably one little detail that I disagree with Saylor on.
That's interesting. Yeah, I'm also very surprised by the gold performance, especially this year. It's been way better than I would have anticipated. Like, I haven't really thought about before 2025, like how gold would perform. But if I had thought about it, I would have not put it at such a high performance. So, like, even in hindsight, I would have definitely guessed wrong on the gold's performance. Interesting.
Yeah, same.
Let's talk. Well, time is flying by, and I wanted to earlier talk already about Bitcoin Treasury companies, and also maybe with you with the smarter web company and all the things. But maybe before we dive into details, how do you in general look at Bitcoin Treasury companies and their more and more important role also within Bitcoin? Like when Saylor came into the scene 5 years ago, it was just him, and then it kind of had a slow start, in my opinion. Like, I expected more companies to follow quicker, and now in 2025 it seems to be this year where more and more actually like follow this lead.
Yeah, there's a lot there. I think overall, I think that Bitcoin Treasury companies are the next phase of maturation and growth for Bitcoin as a financial asset in the global landscape. I think Bitcoin Treasury companies amount to, a major way in which Bitcoin eats TradFi and brings TradFi assets and value into Bitcoin. So I've put out, like, I've added to that same chart plumbing of how I view what MicroStrategy has done. I think that MicroStrategy Saylor has re-engineered the company to be like a capital pump that has put little pipes into the bond market, the fixed income market, the equities market, and now the money market with Stretch, and these different products are these little pipes into these buckets. And as a company, Strategy is pumping value out of these buckets and pouring it into Bitcoin. And I think that will happen in every capital market in the world. There will be a strategy like Bitcoin Treasury company that does the same thing in each capital market, and they will be the primary means by which the equilibrium is reestablished in global asset distribution. So how that chart goes from its current state to 20 years from now, a future state of Bitcoin being now not 0.2% but 7% of global asset value, and it's going to come from all of these other buckets, but especially from the fixed income bucket, from the bond bucket, and I think the disproportionate amount of capital is going to flow into Bitcoin through these Bitcoin Treasury company pumps that are designed to siphon this capital out, and take it to greener pastures, basically by offering a better version of what that capital is looking for. So in the fixed income market, people are accustomed to getting 10-year U.S. Treasury bill 4.5%, when in reality true inflation's 7%. And then here comes Saylor offering 10%, and it's actually, in my view, if you understand how good of an asset Bitcoin is and how over collateralized Strategy is, in my opinion, it's lower risk than U.S. government creditworthiness. So it's an incredible value proposition to fixed income allocators who are looking for, how do I beat inflation by a few percent in a fixed income asset? And Saylor is offering the best thing out there, and and nobody can compete with that, because Saylor's product is powered by Bitcoin, and nobody else has that. Everybody's has these fiat debt instruments that are powered by promises. Saylor knows that Bitcoin's going to grow at, or believes that Bitcoin's going to grow at 29% a year CAGR over the next 20 years. So he's happy to pay 8 to 10% in order to get capital to put it into Bitcoin and have it grow at that rate, and his shareholders benefit from the delta. So that's what's going to happen, I think, globally over the next 20 years. And Bitcoin Treasury companies will be the big story in global finance that nobody sees coming right now. Over the next 20 years, it's going to be, Bitcoin eating the world of finance via these Bitcoin Treasury companies and the products they bring to market in each of the capital markets in the world.
It's interesting because bonds, I feel like, are the least attractive asset bucket for me in there. It's like, if I go through that of maybe also money, but Bitcoin, gold, arts, equities, real estate, and bonds, I'm like, yeah, bonds is like literally right down at the list where I'm like, why would I park my money in there? It's like really down there. I'm like, Bitcoin, yeah, like even gold, even arts and collectibles, equities, obviously, real estate, even you could make an argument like, but then bonds, it's like, it's the first thing that I see like draining a lot of financial energy towards Bitcoin.
Yeah, exactly. I think it's the bucket that will see the greatest flows from in sheer volume to Bitcoin. I mean, it's over $300 trillion of global value sitting in fixed income instruments, promises for future fiat, and in my opinion, they're all, it's a burning platform where the value proposition of a bond makes sense in the 40 years that we had after 1980, where interest rates were 15% and mortgage rates were 18%, in the US. And as a result, home prices were low because you couldn't afford a mortgage on that much, right? And then from that point in time forward, it's pretty much been a straight line down to 0% interest rates, which we hit in like the mid 2000s, and have been there for 10 years, I guess, after the 2008. But 40-year bull, that amounts to a 40-year bull market for bonds, where as you're decreasing the interest rates, then the value of the future cash flows from holding a bond increase because you're discounting them at a smaller rate, and that jacks up the value of bonds. And we had 40 years of that happening, and the result of that is the 60-40 portfolio being the accepted wisdom for how you should allocate your money, because it worked for 40 years following 1980. The 60-40 portfolio was the winning approach, and structurally, mathematically, that just can't work going forward. It's not going to happen. And I think that we have received the wisdom of the prior generation for what worked for them, even though it doesn't work, it can't work now. That's what everybody's told, because it worked. And going forward, I think what'll happen is the Bitcoiners, the hard money appreciators, whether you're gold or Bitcoin, but especially if you're Bitcoin, I think they have the right formula for the macro context going forward. And then the winners of this generation will be the Bitcoiners, and then the accepted wisdom 20, 30 years from now will be, well, you should have a good allocation to Bitcoin. It's just it takes a whole generation before accepted wisdom is updated.
100%. It takes some time. Money is a sticky thing, a network thing. And now I think this wasn't the case last time we talked. Now you're also the head of Bitcoin strategy at the Smarter Web company. How is that going?
Yeah, it's going great. It certainly wasn't true when we talked a year ago. I joined Smarter Web 4 months ago now, and have been contributing on that front. I'm super excited about it. My thesis here is that there will be a Bitcoin Treasury company that becomes MicroStrategy like in every major capital market in the world, and I think we've seen that in the U.S. We've now seen it with Metaplanet in Japan emerging as the leader there, and Smarter Web is the leader in the UK. Still small, we're only 5 months into it. IPO'd 5 months ago and have grown from 0 Bitcoin to just over 2,500 Bitcoin in 5 months, which is significantly faster pace than Metaplanet. Also, this sort of bear market for Bitcoin treasury companies globally has tested, stress tested everybody, and has hurt share prices for everybody, but has basically stopped the flywheels for most Bitcoin treasury companies. I think basically the ones that didn't get enough of a critical mass going, didn't get enough traction, didn't have the right ingredients. And fortunately, in the UK, that is not us. We're in a great position. We have emerged from this sort of bear market over the last 10 weeks with a greater market share of UK, as if you add up all the market caps of Bitcoin treasury companies, our percentage of that has increased. We're in a better position of relative strength than we were before this. And looking ahead, we have the same instruments in place that Metaplanet relied on to grow, namely, an ATM style instrument where you're able to sell directly into the liquidity, the volume traded on up days. Fortunately, we're one of the more liquid stocks in the UK, and and we also have the third largest Bitcoin Twitter community. So it's Strategy, Metaplanet, and us. I think that kind of is an indicator that a lot of savvy Bitcoin investors are excited about the setup that they see for Smarter Web to hopefully repeat the Metaplanet journey that we've seen over the last year and a half. And now we're 5 months into our journey and appear to be on that same trajectory, though currently 1/10 the amount of Bitcoin that Metaplanet has. So and for that matter, Metaplanet had this amount of Bitcoin about 9 months ago. So it kind of shows you how quickly this model can work and can snowball. And we're excited about continuing to do that, and hopefully we keep following that trajectory in the UK.
That's super interesting. How much of a role actually does like retail investors and also as a product like Twitter communities like that and like the individual level actually play a role in a Bitcoin Treasury company?
Yeah, I think the reality is that as with Bitcoin, the first people to understand this model are savvy individuals. And with Bitcoin, that has meant Bitcoin Twitter and the information flows available on Bitcoin Twitter. And if you're a savvy person who's willing to do their homework and really think things through, and you can collect all that information on Bitcoin Twitter and have a greater conviction in Bitcoin as a result of it. Same is true here with Bitcoin Treasury companies. It's not surprising. You need to first understand Bitcoin, and then you need to understand the sort of financial engineering levers that are available for Bitcoin Treasury companies to arbitrage fiat into value delivery in Bitcoin terms for shareholders. And that's pretty abstract, but the mechanics are very real and math driven. So it requires people doing their homework, and the first people to do that are the terminally online Bitcoiners who already understand Bitcoin and are capable of doing their own homework and coming to their own conclusions. That's who Bitcoin Treasury company investors have been to date, largely. And we're seeing institutions slowly waking up to the model. And I think that trend will continue. But I think the reality is institutions lag behind the sort of super Twitter savvy Bitcoin investors who are at the cutting edge of information flows.
That's super interesting. I like. It's almost like the Bitcoin Treasury companies. It's so fun. I in my notes I had a shortcut for Bitcoin Treasury companies, and then I wanted to figure out what is the right what did I want to say here, because Bitcoin Treasury companies is literally BTC. I just realized that in that second.
Yeah, there's I still write BTC TC, Bitcoin Treasury Company, but yeah, the crypto people have started calling these things DATs, digital asset treasuries, and I really dislike that because it's crypto people inserting themselves into something that is it only makes sense to do this if you're accumulating the best asset in the world, which is Bitcoin. And so all of these other crypto things, in my opinion, will end up in tears. And I don't want to I don't want Bitcoiners to adopt this this term that's been foisted on us as an inclusive term to include altcoins. But we need to come up with some sort of monosyllabic, easy to say and easy to understand alternative term, because DAT is very punchy, So I don't know what sort of terminology we will end up landing on, but I think Bitcoin Treasury Company is a bit of a mouthful. So hopefully it's something better than that.
Yeah, and BTC is kind of confusing.
Yeah, you can't do BTC.
Thank you for watching this video. This was only a snippet of the podcast, and if you want to watch the full episode and get all of the context of this episode, you can click right here or here. Oh, maybe also here.